learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvested. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at September 11th, 2020, and the stock market is back in correction territory. The NASDAQ dropped about 2% today, 1.5 on the Dow, 1.75 on the SP 500, but it was kind of a big day. Very, very slow. You saw the option phenomena of a lot of movement and prices doing nothing, but now we touched slightly below where we were the other day. We kind of bounced up a little bit from there. We talked about this the other day on these watch lists. A lot of even random factors came up, or surprising more or less, but stuff with the UK and all that. Trying to get you a better chart here, but you can see the next question is touching a little bit below here and then getting ready for some movement here. So it's an interesting point in the market. We have a lot to talk about. Tomorrow, Friday, should be interesting, but I'm expecting another phenomena that we've kind of been seeing here with the gap up and down, so we'll talk about that. But nonetheless, it should be a froggy Friday. So we have a lot to talk about. I got the keys, I got the plays, everything that happened in the market today and what else we're looking at, and that is pretty much it. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want to learn about macroeconomics while watching the market make moves in the most haphazard ADHD way possible, then we should see you on stream. It was a lot of fun. We love you. God bless you. Shout out to Chad BB. And the most important thing you need to do, post your watches below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad again. I better see you there for Bring a Friend to Colte. But right off the bat, the first thing, we are back in correction territory. Again, that 10% from the all-time highs. Doing that in 3 days was the fastest in history, but now we're hanging back around these levels. So we were out of the clear yesterday. Now we're not out of the clear. This is that back and forth movement we were kind of expecting. So the main thing we talked about here today is that the VIX tells the story. So we've been watching this. I brought this up yesterday, and this is where it gets important. And really, the main thing, especially for the option traders, you guys have seen, this was a very, very big move, even top to bottom. If you put it up on like the 1 minute, my favorite time frame, it was almost comparable to that Friday. However, we gapped down today, then we ripped up pre-market. There was a lot of activity going on. See, there's with extended hours. We gapped down. That's where we closed. And then by pre-market and market open, we were all the way up. So there was a lot of moves. So there was a lot of round trip move there. But again, back to the VIX, the main thing we saw, we kept seeing it hit new lows throughout the day, but it really wasn't playing along. You could say it's broken, but it's kind of highlighting this point here with the options that the velocity is slowing and it's not believing the move. And really the best example I've been giving is that this is a visual representation of kind of how premiums have been lately. If you got in early, you really caught the run up on the move. They kind of stayed volatile the last few days, but now, even though the market's dropping again, a lot of the premiums kind of held a certain level where they're not cheap because they're still up from a few days ago, but then they're definitely not at their high. So depending on where you bought them, you would get clapped. So now putting this into perspective, this is what we talked about. This is the market adjusting to these lower levels. It's not happening as fast. So I said this on the Tuesday watch list that, remember, if the market hangs out around the lows and it just doesn't really sell off, the market's going to be like, okay, well, it's not that bad. It makes it a lot easier. And now, too, the expectations of pricing, ironically, we've been seeing this lesson on a very micro scale with specific option plays like that McDonald's the other day when it kind of just leveled off, but that's what's happening now with the broader market. Even though we're hitting a new level, the way it's occurring, it's getting reflected in the VIX, where even though we could go lower, it's not as scary as it was unless or until the speed of this whole move actually picks up. So this was the main key for today. This is going to be the main key now for tomorrow, and this is that next phenomenon. The key is if we're going to gap up or down tomorrow, and then how the whole market plays out, and it all is going to have to do with speed in terms of selling off or buying as well too. Even the upside, even hitting a new low, setting a bottom, speed and velocity is key. However, now this is where it comes into the option strategy. We cannot force any plays tomorrow. I'm going to be looking for a lot lot of plays. Again, if it moves intraday, it'll be good. The fact that there will be decay on a Friday could help with the dailies, but you're definitely going to take a lot of risks. But most of the moves are happening either gap up or down. You guys have noticed throughout the day what's been happening. If you got in the play the day before, market would gap up or down. You either won or lost depending on how you were positioned. Premiums would go up, then it would barely move throughout the day, and then depending on what happened overnight or coming into the morning, it would gap up or down again. So that's kind of what I was saying today, and we've talked about exposure and all that, but that's pretty much what I'm expecting to play out tomorrow. I think most of the move will happen in the pre-market move or even that first hour, so we're going to have to see. But keep that in mind in terms of setting up plays, that most of your gains are going to occur not intraday, but kind of, okay, getting an idea of how it's moved, whether it's a one-day bounce, two-day, however it may be, and then kind of aligning and positioning yourself with that. But I'm going to be watching out for some sort of gap move and a big move in the first hour tomorrow. Again, should be interesting with some of the news and everything that's brewing. And then finally, that's kind of what set it off today. A lot of people in the news were talking about this today, and I thought it was interesting because this is what we brought up the other day. So if you guys remember, here it is. We kept talking about the pound, and I kind of brought that up overlaid. I showed you the trading economics, but we brought up the pound here on the TD. You could kind of see the 1 year, and pretty much we're talking about how this was leading the S&P. And then today you saw a big fall through on the pound. It really, really did bad. There's a bunch of different news from the ECB. It was kind of positive. Again, that's the European Central Bank, but then there was now the UK and Brexit news, which kind of led some of the issues. But that being said, I think it's like a little black swan that could be brewing in and of itself. We will see. But how it relates to some of this other geopolitical stuff, again, with now Russia, China, and even oil especially, but then some of the other commodities, it is caught my attention. But watch out for that Brexit situation, and that could be something that could play out, or it could all develop and then lead to one of those straw that breaks the camel's back moment. So watch out for that. And then finally, it's a Froggy Friday tomorrow. It has the potential. Again, we don't know, even though I'm expecting kind of a gap up or down and then the movement kind of being concentrated there, there's still going to be potential for these individual moves. You saw what happened last Friday. We turned $15 into 500. There is going to be some of those opportunities, and this is just an interesting market. The key is going to be watching your balances in cash and controlling that. You can make strategic points, but if you start betting majority of your cash in a direction or on a play, then you are literally just betting at that point. But that is pretty much it. So let us get into the plays. So right off the bat, I have 3 different types of plays. I mean, I will watch Apple since we were able to hit that last week, and I think those contracts are still a little weird, especially the ones with time. You've seen that theta crush. However, just cheap options on Friday. I got some on Bank of America with a little time. I will look at the dailies, but I like the banks too, because even in the midst of all of this, you will see that the banks, they really have not moved. Again, they had Powell and all that, but they haven't they've literally been plateauing like Snapchat and some of those stocks that we talked about. You can see there's JP Morgan, Goldman Sachs, Citi. The banks have all stayed there. And remember, that bank thing is coming up. So even then, I want to play this on the shorter term, but I like a lot how it's looking. It could even be a swing trade. We will see. But this is timing's worst nightmare, because this will just literally be theta and kill you. But that is going to be the first play. Again, some of those cheaper options, I did make a play on them today. I grabbed 100 of the next week 22 puts at 4 cents. I think they're at like 5-6 cents on the ask. So even though I got them like during the next low, think about the stock dropping like 40 cents. Since it did it so slow, the options barely went up in value. So that was a very interesting play, but that was that theta crush cuckening effect that you saw today. So watch them. The next play I'm going to be looking at is McDonald's and HD. Both of them are the big rotation winners, and they move a lot. So if there is activity tomorrow, you saw how we hit those last Thursday, but it might be different here on a Friday. Let's see how that plays out. But I like both of those. I'm still in those calls waiting on the Travis Scott news to see if that could potentially hit. But HD, I have no other position in. But that's going to be the second one I'm watching. Then Microsoft, Walmart. I have the Microsoft. I have one of those dailies. It came back to life. Remember, we made it free yesterday, but they came back. That's going to be interesting, and that gives me some of that exposure. But both of these can move off of that stupid TikTok news and how that's been going back and forth. So it'll have the ability to kind of bake in some random IV there, and that might make it expensive on Friday. But we've been watching Microsoft and Walmart move. They've been getting some attention, so keep your eye on there. And then finally, I made this play today. I'm going to see again, even for a daily, or if this develops. But Netflix, they were one of the stay-at-home tech winners, but the play that I grabbed on it here, and again, they had weird news. I think there's like over a couple 100,000 tweets about canceling Netflix because of one of the movies that they're putting on or shows. Very, very controversial, but there's a few reasonings to this play. Again, I just like how Netflix has been a winner again, one of those stay-at-home winners, but I grabbed two of the September 18th 415 puts, got them at 60 cents each, so I spent $120, $400 on the options. I didn't spend as much as I've been, still a decent amount, but still keeping cash. I wanted a little bit of exposure. I had some graveyards come out today. We didn't sell those, but the idea is just not getting too jumpy, because even on this move, even I got those Bank of America's, good timing. You put your money down, you're getting stuck in these plays, whereas now if the market even does go down, since it's not selling off, you're not making as much money, but then if it bounced, you would get clapped. So be careful. That's what we're going to be looking for, the opportunities to snag it where we could confirm it. But those are the first 3 plays or 4 plays I'll be watching tomorrow. Again, McDonald's, HD, all those. I will be watching Apple. We have those graveyards. They're a little bit cheaper. But at the end of the day, don't forget the cuckening and how it could be playing off. There's going to be a lot of whipsawing, but we talked about it today. Since I have exposure, I didn't really want to grab too much today. If you didn't have exposure, a lot of premiums are cheap. This cuckening, this premiums getting decayed, even with the stock going in your direction, it helped, but we still haven't confirmed it. So it's a good time, but it's not a good time to throw all of your cash in. Really a very, very small moment. Calls and puts, everything is cheap on both sides, but that's because things are getting deflated, because if we start entering a period where you don't move for a month, there's a reason why those calls are going to get cheap, and those puts, they may never hit. Remember, you might need to end up in the money, but those are going to be the main plays I'm going to be watching for tomorrow. As far as everything else, really just watch the banks, some of the other Momo movers, but the banks are really going to keep my eye. The main ones we have, and it's really going to be about responding. And then finally, how to respond will be through the UVXY. If this starts to go back up again and starts to go green on a big red day, or as the market goes down, starts to hit new highs with each new low, that is going to give you the information you need. But if it kind of levels out here, this could put us in an interesting scenario, and it could resemble a lot of that June 11th of this year. Again, the February beginning of the COVID, or even August last year with some of these cuck zones before we've experienced some bigger moves. So watch that. Watch all the place markers. TLT, again, everything is still in a range, so I hope you are ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to embrace the concept of maybe be prepared. Don't bet it all, but get positioned. Be smart. Be wise. Balance the budgets. Don't get too hyped. Don't get too jumpy. Keep the pace. Never forget that the code loves you. I love you. And we'll see you in the morning. Let's go.